Drill down earnings with a look at the latest results from Atlassian. The stock ticker is TEAM because they are all about team and collaboration software. This is a business story behind that stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. Q1 2025 earnings for this company, neither a beat nor a miss to Wall Street. It was right in line with estimates with $1.2 billion in revenues. But that was up 21% on a year-over-year basis, which is really strong for this company. And while they are still losing money, their operating or EBIT profit margins, if you will, are losses. There's no profit margins, they're loss margins, but just marginally losing money, negative 3% on the operating basis right now. So creeping towards profitability, perhaps. When we look at their business, there's really two chunks of business here. They have a little marketplace business. They used to have a server business. They got rid of that in the last year. But this company sells what they call cloud and data center. Cloud is quick setup and subscription pricing, quick and dirty, you're in, you're out. Data center is a better business for them. It's more, and maybe better for the users too. More customization, term license fee structures. They've got, the users got a lot more control over the applications. And though historically, mostly of the revenue is coming from their old server and data center business, they've gotten rid of server. And now what happens is customers come in, when they come in the data center business, they move to the cloud. I'm sorry, when they come in the cloud, they move to the data center. So the data center is going to be more profitable for them, but the cloud really shows future growth if they can convert those customers, which they've been really good at doing. So the data center business, that more profitable business, is really growing fast at 38%. Cloud's growing fine, steady at 31%, but really that data center business is breaking away in terms of growth, and that's a really positive sign for this company. The marketplace business, not very significant. When you look at it in a pie, or as we like to, in a donut, who doesn't like a donut? So 5% of the marketplace business in terms of overall revenue is not very important. Data center, however, growing faster, even though it's just 28% of the business, and cloud is most of it. So how did the stock react when these numbers came out? Well, the market seemed to like these numbers when I look over here at my other screen at how the stock reacted to the numbers, our total return here was a 19% return in after hours trading. So finally breaking out of the only 4% return we've seen in the last year. The guidance is really strong. The buyback news is really strong. And the company talked a lot about a lot of new tools that they're using, including one called Loom. And so we get our voice messages, we get our text messages, we get our email messages. Well, now you can look forward to getting video messages. These Loom messages, which are an asynchronous video messaging tool. You record a Loom whenever, you share it. They're finding that it's a way for teams to really collaborate in a really powerful way and really connect. And indeed, the CEO, one of the co-founders, one of the other co-founders bolted recently, but Mike Cannon-Brookes gave some comments to shareholders using a Loom.
So I thought maybe one thing I could do with this first investor Loom is talk a little bit about the system of work and what it means to me and to Atlassian. And the system of work we describe as our philosophy for how technology-driven organizations get work done, how they connect their business teams and their technology teams together. And it's super important, and when I talk to customers, it's often my first questions. Because when you talk to CIOs and CEOs, some of their biggest challenges, they understand that they're a technology-driven organization. They understand that technology and software is their fundamental source of strategic advantage. They're often not sure how to connect their technology teams with their business teams, how to get the things that they're building, the R&D they're doing, their new apps and services and libraries and efficiencies they're gaining from technology, how to connect them with their business goals and with their business teams, their marketers and finance teams and customer service teams. And that's fundamentally the mission of Atlassian. Right, when we talk about unleashing the potential of every team, we do that through connecting technology and business teams together increasingly. We've done it for 20 years. We're going to keep doing it better every single year.
So that was his first investor Loom. Also my first investor Loom. And now it's your first investor Loom, that from the CEO of Atlassian, whose stock is flying after these results. All right, what's it all mean? Your big drill down earnings takeaway. So first quarter 2025 earnings from Atlassian showed us $1.2 billion in revenues, a 21% increase on a year-over-year basis. They've really cleaned up their product offerings in the marketplace. They're forecasting some really strong growth. They're buying back shares. And the one number that tells us a whole lot is their data center business, which is their higher margin professional service, is growing faster than their cloud business, growing at 38%. There's your drill down bite, the one number that tells you a whole lot. All right, thanks for listening. I'm Cory Johnson. This is the Drill Down Earnings.